Welcome back, everyone. I'm glad you're here today because we're diving into a detailed breakdown of Applied Digital Corporation, ticker symbol APLD. And as of March 23, 2026, this company is moving through a very complex phase that combines massive long-term fundamental growth with a short-term technical correction that has created both uncertainty and opportunity in the market. Over the past 24 hours, APLD has shown a high level of volatility, recently closing at 25.93 cents, which reflects a decline of approximately 2.88% in the latest trading session. And while that might seem concerning at first glance, it's important to understand that this drop is not happening in isolation, but is actually part of a broader monthly pullback of nearly 25%, largely driven by macroeconomic pressures such as rising Treasury yields and ongoing geopolitical tensions in the Middle East that have been weighing on the overall market sentiment. This content is for informational and educational purposes only and should not be considered financial, investment, or trading advice. I am not a licensed financial advisor, and nothing discussed in this video or content should be taken as a recommendation to buy, sell, or hold any securities, including Applied Digital Corporation, APLD. All opinions expressed are based on publicly available information and personal analysis, which may be subject to change at any time without notice. Investing in stocks and other financial markets involves significant risk, including the potential loss of your entire investment, especially in highly volatile assets like APLD. Always conduct your own research, evaluate your financial situation, and consult with a qualified financial advisor before making any investment decisions. Past performance does not guarantee future results, and market conditions can change rapidly due to economic, geopolitical, or company-specific factors. By viewing this content, you acknowledge that you are solely responsible for your own financial decisions. Despite this short-term weakness, the core story surrounding Applied Digital remains extremely strong, especially as the company approaches its fiscal Q3 2026 earnings call scheduled for April 8, 2026, which many investors are closely watching as a major potential catalyst that could significantly influence the next phase of price action. When we shift our focus to the fundamentals, the outlook for Applied Digital is exceptionally robust and continues to strengthen as the company transitions away from being primarily a crypto mining operation into becoming a major player in AI infrastructure, which is one of the fastest growing and most important sectors in the technology space today. In its most recent quarterly report, the company delivered an impressive 250% year-over-year increase in revenue, reaching $126.6 million. And this level of growth is not just a one-time spike, but is supported by long-term agreements and strategic positioning that could sustain expansion for years to come. A key driver behind this growth is the company's massive 15-year lease agreements with major industry players such as CoreWeave and Oracle, deals that are projected to generate over $16 billion in total revenue over their duration, providing a strong foundation of predictable cash flow and long-term stability. In addition to these partnerships, Applied Digital has also secured significant financing to support its ambitious expansion plans, including a $2.35 billion private offering that is being used to fund the development of its Polaris Forge campuses, which are expected to play a critical role in scaling its AI infrastructure capabilities. Analysts across the board remain highly optimistic about the company's future, with a consensus buy rating and an average price target of around $37, suggesting a substantial upside potential from the current price levels and reinforcing the belief that the recent pullback may be more of a temporary correction rather than a reflection of weakening fundamentals. From a technical analysis perspective, however, the picture tells a slightly different story in the short term, as APLD appears to be in what can be described as a cooling off phase following its previous strong rally that pushed the stock to a 52-week high of $42.27, and since then, the price action has broken below its medium-term rising trend channel, indicating a possible shift toward a more horizontal or consolidative movement rather than continued upward momentum in the immediate future. Key levels to watch include immediate support around $21, which could act as a critical floor if selling pressure continues, while major resistance is located near $38.70, a level that would likely require a strong catalyst to break through. Momentum indicators also reflect this short-term weakness, with the relative strength index RSI 14 currently hovering around 43, suggesting neutral to slightly bearish momentum without yet entering oversold territory. And the MACD sitting in negative territory at minus 0.39, which confirms the presence of a downward trend in the near term. Additionally, the stock is currently trading below its 50-day moving average of 32.60, which is another signal of short-term technical weakness. Although it's important to note that longer-term institutional support remains strong, with approximately 65% of shares held by major institutions such as Vanguard and Macquarie, indicating that big players are still maintaining confidence in the company's long-term trajectory. Looking at market sentiment, particularly on social platforms like X, the conversation around APLD is a mix of optimism and caution, with many retail investors expressing enthusiasm about buying the dip, while others are raising concerns about insider activity, especially following recent filings that revealed CEO Wes Cummins sold approximately 165,000 shares at an average price of $36.42. A move that some traders interpret as a potential red flag, while others argue that it is a normal part of executive compensation and portfolio management. On the bullish side, institutional investors continue to highlight the company's strong financial position, including its $2.3 billion cash reserves and the strategic spin-off of its cloud business, both of which are seen as positive steps toward unlocking long-term shareholder value. Social sentiment is also heavily focused on the upcoming April earnings report, with many speculating that any positive updates regarding data center energization timelines or operational progress could act as a major catalyst and potentially trigger a rapid short squeeze, especially given the stock's high volatility profile. For investors who have a higher risk tolerance, the current situation presents what could be considered a valuation disconnect, where the stock's short-term technical weakness contrasts sharply with its strong fundamental outlook, and some analysts estimate the fair value to be as high as $38.20, implying that the stock may currently be trading at a discount of around 30%, which could represent an attractive entry opportunity if the price begins to stabilize in this range. However, it's important to approach this opportunity with a clear strategy, keeping in mind the potential for significant volatility, particularly with a beta of 7.20, which indicates that the stock can experience large price swings in a short period of time. Investors considering entering a position ahead of the April 8th earnings call should be prepared for this volatility and ensure that their position sizing aligns with their risk tolerance. Additionally, given the company's relatively high debt-to-equity ratio of 1.79, it is crucial to treat APLD as part of a diversified portfolio within the AI infrastructure sector rather than relying on it as a single concentrated bet, as diversification can help mitigate risk while still allowing investors to benefit from the broader growth trend in AI infrastructure. Overall, Applied Digital stands at a critical crossroads where short-term uncertainty meets long-term potential, and the coming weeks, particularly the upcoming earnings report, could play a decisive role in shaping the stock's next major move. If you found this breakdown helpful and want more in-depth analysis like this, make sure to like the video, subscribe to the channel, and stay tuned for more updates.